Hey everyone, welcome back. Today we're looking at NIO. NIO stock plunge 50%. Is it time to buy the dip or is it time to sell? So we got this article from Investors Place. NIO stock continue to remain beaten down despite some intriguing catalysts. The company unveiled the world's first 900V drive system and a new model expected to launch in May. However, persistent production and demand-related issues continue to pummel this stock. As the EV world is seeing significant downside currently, NIO stock is the only one of the company experiencing a big-time downside. The fact that the stock is down nearly 50% tells most investors that they need to know about this stock performance thus far. Increasingly tight competition in China combined with other sectors-wide headwinds to provide big downside potential for the company moving forward. So most growth investors may have moved onto their other names, such as Tesla. A lot of investors would prefer investing in Tesla right now than NIO, Polestar, Rivian, Lucid, the list goes on. If a lot of investors had to make a choice, they'd probably invest in Tesla or probably BYD. But there's some other companies out there that are legacy automakers. Stocks are doing great and they're looking at EVs. They're investing in EVs such as Porsche. Porsche created a fantastic Porsche Taycan. Now they've got the Porsche Macan, all-electric vehicle that's coming quite soon to the market. So investors are also looking at those companies and saying, well, those companies are slowly transitioning to full electric vehicles and they will become full electric companies eventually, or mostly electric anyway. So if anything, what investors have right now is just a lot of options, significantly amount of options to invest in. NIO's monthly deliveries are stabilizing. Now, it's difficult to ascertain whether the Chinese EV maker could be on the brink of a comeback. The company did see Q1 deliveries came in below analyst forecasts. But if the company can beat expectations moving forward, perhaps there is a value argument to be made for this stock. So this is just what the article has to say. I've got my own opinion when it comes to NIO, for sure. NIO is a fantastic company, as most of us are fully aware. The stock right now is $4.10. The crazy part about this is that early this year, literally the start of this year, the stock was $8.42. The company held twice the value it does today. One of the very promising thing about NIO is that they have a lot of cash available. They are not short on cash at all. And we can all see that they're using this to their advantage. They're building out their infrastructure within the European continent. And this is the best move they can do. The next big market they aim to tackle is obviously the US, and that will be a far more difficult challenge. Existing brands in the US are already struggling on their own. These are brands such as Rivian, Lucid, Tesla is even struggling. Now, if you don't understand how serious this price war is, just take a look at what Elon Musk has just announced. The Tesla Model Y starts at $29,490 in the US. This is after US federal tax credit and estimated gas saving. So at this point, the next thing that Tesla will be announcing is that you buy one car, you get another one for free, quite literally. So the price war is in full swing. Tesla is not slowing down, and Tesla can afford to have this price war. They can afford to sell their vehicles for super cheap. They've maximized optimization in efficiency, and they continue to improve their efficiency in reducing costs and increasing profit. So they can continue lowering the cost of their vehicles. This is the Model Y, not even the Model 3, the Model Y. So clearly Tesla has a batch of Model Ys and they're just like, let's just get them out the door. FSD is going to be so valuable to everyday customers that it won't be a problem. Tesla's thinking we can make that money back just by getting this vehicle in the hands of customers. That's what they're banking on long term. Other smaller brands, predominantly like Lucid, Polestar, Rivian, they can't afford to do this. They cannot afford to make the same strategic options that Tesla is doing. Tesla is building a fleet of robo-cars, and they're announcing the robo-taxi fairly soon. But this is not to say that Rivian lacks value. I don't believe this in the slightest. This is a company that generated over $17 billion in the fourth quarter of 2023 last year. How can you say this company is now valued at $8.4 billion US dollars? Let me get this right. In one quarter last year, they generated more than their entire company worth. So this company is not just undervalued, it is incredibly undervalued. And it's quite impressive to see just how cheap this share is. Now for Rivian, so far in the first quarter of 2024, they delivered over 30,000 vehicles. This all accumulates in all total deliveries of all NIO vehicles. They've reached 479,647 vehicles. This is absolutely impeccable, basically almost 500,000. Now in March, they have a year-over-year increase by 14.3%. This is 11,866 vehicles. So despite all the perceived negativity around NIO, it's actually not as it all seems. Once you read into this, you realize that it's quite a different story. Now keep in mind, for the year of 2023, NIO delivered a total of 160,000 vehicles, showing a year-over-year increase of 30.7%. This is remarkable once again, because this year they will certainly deliver over 200,000 vehicles in an entire year. And due to this constant increase of deliveries to the European continent, this is brilliant for the NIO company. Not to mention, the NIO ET5 is still scheduled to come to the UK in the summer 2024 this year. That vehicle is on its way, and I cannot wait to get a test drive of this NIO vehicle. So despite everything, as far as I'm aware, NIO is doing excellent. They're doing exactly what they need to do. Due to the criticism of the earnings before interest tax, that's a negative, and it's negative by a lot. The net income, EPS, those are all in the negative. So what makes me this positive on NIO? Because for NIO right now, they're not optimizing for, the EBITDA. They're not optimizing for cash flow. They're not optimizing for net income or EPS. NIO's purpose right now is infrastructure development. Significant infrastructure development. Just continue building out the infrastructure for your company. And this is what they're doing. They're doing a fantastic job at that. And whilst they're doing this, they're still looking to optimize for efficiency within their company. So everything that NIO is doing, I expected it. This is a new company. All new EV companies are going through a similar struggle. Negative EBITDA, negative free cash flow, negative income, negative EPS. But the major positive for me as an investor, the cash on hand available to this company is a massive amount. In fact, towards the end of last year, it was $49 billion. I mean, that's just crazy. This is with the debt around 11.2 billion and the capital lease around 11.8 billion, which simply means that they're managing their debt really well, being able to pay it off, not having it increase just wildly out of control. I see NIO as a well-run company, but they're even more special than you could ever imagine because this company is bringing innovation. Swappable batteries are not something that is common amongst EVs. This is the only company that's mass producing vehicles that can swap their batteries. The only EV company that's doing that. Every time I read up about NIO, I get more and more excited. So this is where I'll leave the video. Hope you enjoyed it. Thank you for watching. Subscribe to see more. Leave a comment. I'm interested to know your opinions on NIO. And what do you think about my argument points? Do I make sense? Or what I'm saying, does it not make any sense at all? Let's have a discussion, and I'll see you in the next video. Peace.